Hello, everyone. This is Elena Bartash, your real estate investor. And today, my podcast is always about money, private money in real estate. I'm a real estate investor, and of course, me and my friends, we are always looking for new information, for new trends in finance for our deals. And today, my guest, very cool guy. He's young, but he's very experienced. Alex Reid. Alex is mortgage officer, and his specialty is DSCR. Hi, Alex.
Hi, how are you doing today?
Good. How are you?
Very good, very good.
Thank you so much, Alex, for agreeing to be my guest today. It's my pleasure having you here today.
Of course, yeah. Always down to talk real estate.
Yep. Always real estate. Okie dokie. So please, I don't think everyone knows who is Alex Reid. So could you please tell us who is Alex Reid? A little bit more about yourself.
So I'm currently a mortgage loan officer. I work mostly in the creative investing lending space as an investor myself. Started the industry back when I was about 13 years old, making cold calls for my father, and got a taste of the commission, the lifestyle, and real estate. He owns a portfolio now of 70 plus units back in New York. So I'm now here in Colorado, starting to spread my new investments, both in Colorado, Florida, and New York as well.
Oh, awesome. So where in Colorado you are?
I live in Divide, Colorado. It's about an hour and a half from Denver. It's out in the mountains. Actually had a flip that didn't quite sell, and we just ended up having to get out of our hard money loan and turn it into a DSCR ourselves, and getting it ready to be a short-term rental.
Beautiful. Because tons of opportunities for short-term rental in Colorado. Beautiful state.
Yeah,
lots of tourists.
It's very good. It's not a good place to long-term invest. It's a great place to short-term invest as long as you're willing to put the money and time into it.
Yep. Great. So you are investor yourself, and you are mortgage officer. So you know the topic from both sides.
For sure. Yeah. And I practice what I preach. I use the same loans that I do with clients in business, and it's helped me grow my portfolio a little bit faster than most. I mean, I ended up from my first property to my sixth property was about, I think, a 15-month time frame. So, and that's since 2023. So not in an easy market either.
Yeah, I agree. Yeah, it's actually great topic. We just spoke with Alex before started our podcast, and I find out that Alex's specialty is DSCR. It's very cool because my strategy is BRRRR, and DSCR is great option for investors, and I see different tendencies for DSCR on the market, and market changes all the time. And yeah, Alex, what about what are new stuff about DSCR you would like to share with us? What do you see right now? How it works now?
Yeah, so I think right now the biggest thing in the DSCR market is just one of the two new things that we're seeing a lot of is one is people refinancing out of hard money loans. Same that I got stuck into was people are realizing it's a tough time to sell. Maybe they need to become accidental landlords and end up holding the property, rent it out for a little bit, whether that's short-term, long-term, Section 8, co-living, things of that nature. And people are refinancing and being able to get out of those loans with a manageable interest rate, as well as the changes in, like you and I discussed, the co-living space. And in the past, DSCR lenders didn't want to touch the co-living space at all. There still are some hoops to jump through in those loan products, but they're getting possible again to be able to use that rental income. Usually in those cases, as long as you can provide proof of receiving those rents for at least 2 or 3 months.
Okay, so you don't have experience with DSCR from day one. You still need income.
No, you can purchase a property with a DSCR, or you can also use what's called a 1007 appraisal, which is where the appraiser estimates how much they think the property could rent for. You can do it that way if you don't have any rental income in the property. Generally speaking, the only time they're going to allow you to use the rent by the room type income that you would use in co-living is going to be if you've had history. So that's kind of the caveats with the co-living versus a traditional long-term rental is long-term, you don't need history. The co-living, they want you to have it for 2 or 3 months.
Oh, okay. And what about few years commitment? I believe this is a big pain for many investors because DSCR loans, you guys require from us from 3 to 5 years commitment before we can refinance again.
Yes and no. So there are most loan officers push for people to have a 3 to 5 year prepayment penalty. There are options for less. The rates are just usually a little bit worse. You can buy out your prepayment penalty. I mean, there's plenty of clients who have no prepayment. Sometimes it's a 1 year, sometimes it's a 2 years. So the old school way of everybody has to have a 3+ year prepayment penalty isn't necessarily the case anymore. And depending on your situation, there's actually a couple of banks that price better that don't require a prepayment penalty. So, I mean, for example, I have a client right now. He's got like a 6.875 with no prepayment penalty, which is, I mean, obviously fantastic credit. He's a good borrower, but with no prepay on a DSCR, it's not that bad.
Yeah, absolutely. Yeah, but still, DCR is such a great option for people. Really, like you just mentioned, if someone stuck with their fix and flip, they can refinance, hold it. Yeah, just in case.
For sure. And then you also see a lot of people who turn a primary residence into an investment property and they don't want to get rid of that low interest rate. But once they have all that equity and want to pull some cash out, the DSCR is a good way that you don't necessarily need to have to qualify for multiple properties.
Oh, it's actually a great topic. Just touched base. So if someone converts their primary residence into co-living space, for example, they can use DSCR, but do they can still live in this house? Because DSCR is only for investment.
Correct. So DSCR, it has to be only investment. So you can still do a rent by the room scenario, but they're not going to want you to live there as your primary residence, since it's the same thing as a primary residence and using it as an investment property. They don't want you to use an investment property as a primary, mainly because they're qualifying you off of the ability of the property to cash flow. Whereas if you're living there, you're eating up some of the possible cash flow.
Interesting. Let's talk a little bit about appraisal. This is a big pain in the ass for many investors.
Oh yeah.
Did you have any stories related to appraisals? Or maybe you would like to share with us experience, what we should be aware to?
Yeah. So one recently, and this is just a little, never seen something like this in my career. And this actually happened on a loan that closed a week and a half ago. And an appraiser came in with a value. This is a purchase of an investment property. The value was $42,000 above the asking price. The underwriter asked for why they made a few adjustments, just for an explanation. And they ended up lowering the value by $90,000, making us, instead of 42,000 over, 48,000 under. For no reason. Because they changed their adjustments, they didn't even change any of the properties. So haven't seen anything like that before, but it just goes to show that appraisers are just kind of, it feels like they're shooting from the hip. And that was on a purchase. We're seeing even more issues on refinances sometimes because appraisers are worried about overvaluing a property and having the lender come at the appraiser because somebody defaults and is underwater or something like that. So we're running into a lot of issues with that. But sometimes the answer is just order a second appraisal. If the first appraisal comes in low and you truly think that that's a bad value, I had a property up in the mountains of Colorado. The first appraisal came in at $980,000. We ordered an appraisal 1 week later because we thought the property was worth about 1.1. and the appraisal came back at 1.2. There was $240,000 difference 1 week apart from each other.
Yep.
It doesn't make any sense.
Oh, wow.
They're just guessing. So
It sounds like you're right. So, what was the solution? What happened in the end of this story? Such a big difference.
So for that one, we ended up using the higher appraisal amount. They got cash out based on that amount, and it worked great. And I mean, my big advice to investors, if you're having an appraisal done on a property that you already own, especially, bring a packet. If you have the ability to either talk to a real estate agent or either talk to an agent or talk to another investor friend of yours, or run something through Bigger Pockets, wherever you're looking to get your comps, if you can bring a packet that has comps that you think are good representations of the property, the appraiser is not supposed to listen to that value or that packet that you have. But as humans, we see those houses, and now it's in our brain. And when they go to do the report, they're looking for similar properties. So in my scenario that I just gave, we didn't give the appraiser a packet when it came in at 980, and we had a packet with higher comps and the second one, and it came in at 1.2. So I just think that's really important for people to know that talk with your agent, talk with somebody who can help you put something together, and then sometimes it works, sometimes it doesn't, but at least got to try.
Yeah, it's a very funny story. Just guys, wanted to remind you for our audience who is watching us right now, our podcast about private money in real estate, and my guest is Alex Reid. Alex is a real estate investor himself. He has portfolio in a few states, and he is mortgage officer. And right now we started our discussion from DSCR loans. For those who is not too much familiar with what is DSCR, DSCR is federal loan for investors, and it's very common for people who buys, for example, BRRRR method or we lost Alex. Okay, I believe he has no stable connection, and I hope he will come back. Okay, let me tell you a couple words what we were speaking about. So. DSCR loan you can use buying turnkey property. Yeah, I see Alex is back. Yeah.
Sorry about
Alex,
that.
you're back. Welcome back. Yeah, it happens. Yeah, you can use DSCR loan buying a turnkey property. And before you will be approved with DSCR loan, you need to use appraisal. Appraisal, this is a big pain in the ass for every investors, and we really have to calculate our comps really careful, because sometimes appraisal, they can appraise lower than we were expecting. In this time, in this situation, we are in trouble. Yep. Alex, you here? Are you with us?
Yeah. So,
okay.
Sorry, I was cut out there briefly.
Yeah, it's okay. So what if appraisal appraised much lower than investor expected?
Yeah, and that's why I think it's really important to just make sure you work with other professionals. It's always good to get a good network of people, and that's why I think like having a good agent on your team is, and that's obviously not even what I do. It's just very important to have those people as a part of your team.
You mean people who can help you with location understanding, who can help you with comps better, right?
Yeah, for sure. Being able to help with the comps, those packets I was talking about, I think those are really, really important in terms of when you're refinancing a property, but then they also become very important in finding properties. I mean, obviously, we all love finding a really good deal on wholesale properties and other deals that might be off market. For myself, I still always run it by a trusted agent of mine to get a second eyes of stuff. Because even with my experience, there's people who can see and read things in a different way that I'm going to as well. So it's just important to be able to diversify.
Yeah, comps are very important. Recently, I had the situation when one very known application that gives investors comps showed much higher ARV than it's in the reality. But luckily, I have agent on the ground, and agent had much better comps. So really, it's very important to have people on the ground. I agree with you, Alex.
For sure.
Beautiful. Okay, DSCR is pretty much clear. We understand. What else? What else loans we can discuss with you if we are speaking about investors?
Yeah, so I'll give you one more thing on the DSCR, just because this is another big thing for people looking to BRRRR, which I know you mentioned is a big thing you do as well. And with traditional conventional investment loans, you're supposed to wait 12 months to be able to cash out your property now. They changed that from 6 to 12 months as of last year. With the DSCR loans, they actually started allowing people to do it with no seasoning at all, which means, I mean, I had somebody who purchased a property I think it was May 26th, and we started their cash out refi on June 14th because they just put 20 grand worth of work into it, spruced it up a little bit, and we're able to get cash out based on the new appraised value right away. So the DSCR is very good if you're trying to do BRRRR methods with the new changes and getting cash out.
Yeah, absolutely.
And then
honestly, I believe DSCR is great really option. No, I just wanted to say really emotional expression. DSCR is wonderful option.
For sure. And then, I mean, other types of loan options. I mean, obviously the fix and flip loans are very, very good. There are a lot of people out there who are looking for the highest leverage. They're looking for ways to get into properties with as little money as possible. And that's kind of where the fix and flip can come in, right? So the bank will cover your rehab costs. And if the bank's covering your rehab costs, that helps with how much money you need for the project. Of course, they're going to be focused on what that ARV is going to come in at, and that's very important. But another big thing is with the fix and flip loans is that they're not going to look at your assets always. Some do, some don't. But with not looking at their assets, it's easy to bring on a partner, bring on gap funding, bring on a silent investor, something like that, that doesn't need to be on the loan. So that's a very good way for people to get into their first properties that they're trying to invest in. Because in my experience, my first property, I ended up buying with actually $0 of my own money. I did a fix and flip loan, found an investor. He was able to bring the money for the down payment, and I got in with just about nothing. And of course, sometimes that can be risky. So of course, take that at your own risk. But it was a way that I could get in earlier than I would have if I had to bring the standard 20% that people think they do for an investment property.
Yeah. Oh, Alex, just wanted to ask you, I spoke with a couple people, and then they claim they can lend 100% of purchasing price.
There are options that are out there. And the only thing I say, if somebody's willing to lend 100% of the purchase price, always vet them, because anybody who's willing to go that high in an unstable market or less stable market is either lending their own money, or there are a lot of people out there, especially on social media and just in different investor groups, that aren't actually legitimate lenders. They're going to make you send them, a $5,000 deposit. And I've heard of people losing that money from illegitimate lenders. So always vet your hard money lenders, because unlike for myself, I'm a licensed lender. You can look me up on the NMLS and you can go that route. If you're getting money from a private investor, they're not going to have a licensing that you can check. So always do the due diligence. There are people willing to do it. It's just very difficult and tough to find. And often it's going to be somebody that's willing to, often they're going to want to be able to meet you, know your experience, things of that nature, which is where I think, for myself, I use a lot of companies that will allow for second liens. And that way you can still get to 100% financing with the second lien, but you're using a legitimate company, because I'm using somebody who transacts, $1 trillion a year or so.
Mm-hmm. Mm-hmm.
So just very
Actually,
important when you're doing that.
yep. Yeah. I agree. This is a huge, it's wide topic. And yeah, I actually have another couple questions. And one of them was about how we can vet lenders. You said you're a licensed broker, you're a licensed lender, right? We can
Correct.
easily check it. Mm-hmm. What's the way for us to check it?
So for you to check somebody who's actually a licensed individual, you'll go to it's called NMLS Consumer Access. I believe it's .org. But if you just Google NMLS Consumer Access, then it'll pop you up a site. You can search somebody either by their NMLS number or by their name or by their company. And anybody who transacts more than, depending on the state, some states are 5, some are 10, some are 20 deals, but anybody who transacts more than 20 deals should be licensed with the NMLS. So that's a good place to start to check either your lender or your investor.
Thank you so much for this, Alex. I already found this website, and I'm going to put the link under this video. So let's help our people to vet each other. Yeah, I just wanted to remind you guys today our
Hold on one
podcast
sec.
about.
I think I might have lost you for a quick sec.
Yeah. Yep. You hear me? Okay, it looks like Alex has technical issues. Yeah, just a couple words. Today, our podcast about private money in real estate. Today, my guest is real estate investor and broker, mortgage broker, Alex Reid. And we just had a wonderful conversation about DSCR loans and touched base even about appraisals, how it works. So if you guys with us not from the beginning, please go ahead again and watch and listen great information about how appraisal works and how we can cooperate with them. Yeah. Thank you so much, Alex. Lots of great information.
Of course. Yeah, there's a lot of fun stuff. It's always about, part of what I love about my job is figuring out ways to get creative in getting into investment properties, whether that's with as little money down or as little hassle as possible. And I do that for myself too. So it's part of what I love, and I can't wait to continue to buy more and more with different ways.
Yeah, wonderful. Beautiful beauty of real estate. And another question just came out from my thoughts. Usually for investors to take the decision, do we want to buy this property or not? We really want to have all numbers from lender. But you guys usually have so much hidden, some fees, some points, something like this. Is there any standard we can request from lender to have our numbers predictable? How we can know upfront what you will put in your underwriting?
Yeah, so I would speak with somebody that you plan on possibly using. They should be able to give you a good estimate. Saying a standard is difficult because every state has different closing costs. For example, Colorado's closing costs are relatively low compared to, I'm from upstate New York originally. New York is one of the highest closing cost states in the entire country. Same thing with Florida. They're very expensive. So speak with somebody in the state that you're looking to invest in, and they should be able to give you a rough estimate on what you should look like. And that will give you kind of the inclusive amount of title costs, lender costs, underwriting fees. I mean, if you're looking at just the lender fees, a good rule of thumb is anywhere between 1.5% and 2.5% is standard for the best rates. And sometimes you can get a little bit higher rate for anywhere between 0.5% to 1%. It just depends on how the lender decides to structure the loan. If cash flow is more important, you'll take more closing costs and a lower rate. Otherwise, you'll take the lower costs. So I would say speak to somebody who's licensed that you trust, and they should be able to give you a relative fee breakdown. And then, of course, fees can change slightly based on property, what the taxes are, insurance, but you should at least be able to know what that looks like. And I always tell people, get at least 2 quotes. Make sure that the first person isn't trying to make every penny they can off of you. Get 2 quotes. And also, if somebody even is going to give you a higher cost quote, they're less likely to if they know they're competing. So other loan officers listening might hate that I'm giving that advice to people, but as a consumer, it's important to do so.
Thank you so much, Alex. Great advice. And usually, how long do you, how long it takes for you as in for DSR lender to get approved your borrower?
From start to finish, or just to approve the loan for an offer?
No, let's say after appraisal, send report, you receive this report, right? So how much time do you need since then?
We can close a DSCR 21 to 28 days. So after the appraisal report, anywhere between 1 to 2 weeks max. So it shouldn't take too long.
Okay. And why sometimes it takes so long time for appraisal to send their report? What is the system? Why they work so slowly sometimes?
Part of it depends on area. Like if I'm doing a loan here in Colorado in the Denver market, there's a lot of competition. So there's pressure for them to work very quickly. So often we get appraisals back 2 or 3 days after they do the report or do the inspection. Whereas in other areas, especially rural areas, there's less competition. So they're less incentivized to do so. And I think the big thing too is knowing which companies to use. Some appraisal companies underpay appraisers, which makes the appraiser make it less of a priority to do that report. Whereas other companies pay all of the money that you're using to pay for your appraisal, all of that goes to the appraiser. And if that's the case, they're way more incentivized to work quickly. So I think a big part of it is knowing who to work with as a lender and who to work with as an appraiser. And that will help move it forward. Besides that, sometimes in rural areas, we run into issues that they have a tough time finding comps. And that can be an actual reason. But besides that, there's a shortage of appraisers out there, and it's just slowing things down, it feels like sometimes.
Really, I didn't know about it. And what states, Alex, would you say we can potentially face issues with finding comps or any other specific for appraisal?
So from what I've seen, rural North Carolina is tough because I have a lot of clients who buy in North Carolina because it is a good market to buy for short-term rentals and flips. But in rural areas, we tend to struggle a bit more. So North Carolina can be tough. The hardest that I've found is Montana. Not that a ton of people are buying in Montana, but it's just such a large state, and there are less appraisers in Montana than there are in every state except for, I think, 3. And they're just so geographically large that sometimes you're finding an appraiser that's coming from an hour away, which of course is going to make things a little bit slower. And then, areas that I think are moving quickly would be areas like Colorado, Florida, Arizona. They've been doing very well. So those are good areas that I've seen, appraisals come back within 72 hours. Instead of, Montana right now, I have an appraisal that's taken 3 weeks to get back.
Oh, so cool, so cool. What about Midwest? What about Ohio, Missouri?
Missouri's pretty good if you're close to a city. So rural Missouri can be tough, but if you're near St. Louis, St. Joseph, or anywhere really between that area, it's usually pretty good. There's a lot of appraisers in the St. Louis, St. Joseph area. If you end up in the middle of the state, you can sometimes struggle to find somebody as quickly.
Oh yeah. Oh my gosh, so much to know, especially when you buy your first or second property. You will get through so many lessons with lenders, with appraisals. Oh my gosh, with contractors. So
For
much to know.
everybody. You got to know, you got to run into everything. I mean, my first property, learning contractors was my biggest learning curve, and learning how to line everybody up, and that everything's going to cost more than you originally thought. So budget for it. And it's
Yeah.
just the learning curves of investing.
What is your recipe working with contractors? How to avoid most of mistakes? Because it's such a painful topic for all investors.
For me, I stopped going for the cheapest guy. I used to try to focus on finding the person who could give me the best price. And it's like the triangle of you can have the cheapest, the fastest, and the best quality. You can have two of the three. You can never have all three. So if you go with the cheapest, then they're either going to take forever or they're going to do a really bad job. I ended up, my first investment property, I had the cheapest floor guy I could find. We had to redo the floors completely because they just didn't get done, and it ended up costing me more money. So find somebody who's got good reviews, isn't the cheapest, and is willing to show you some of the work that they've done. Because if they don't have pictures of the work that they've done before, they probably don't do very good work.
Yeah. And how often do you communicate with contractors? I mean, during the project?
It depends. If it's the first time working with them, I will communicate a little bit more often. So I try to have 2 or 3 times a week to check in, whether that's either going to the property if it's close to me, or at least getting pictures and updates during the process. Now, once you have somebody you trust, I let them update me. I don't even necessarily check in. I have a property we're renovating in Tampa, Florida right now, and he's been doing fantastic. I don't even get any pictures or ask for them until the project is done and he's asking for the invoice, and I just trust it's going to be done. So it's very important to find somebody that you can trust so that you don't have to spend hours double checking and working with people like that. If you can find somebody who you can trust to run the project, it's going to save you time, which is going to save you money.
Life and nerves and health and stress.
For sure. It'll keep the hair on your head. You'll try to not get as many grays as early on. And so
Yeah, but to be honest, how can you know before you've done with them couple projects, at least one? You really cannot know.
it's tough to know. I try to get recommendations, whether that's from other people who have used them before, if it's in my sphere, or sometimes it's going to different Facebook groups and getting recommendations from people. If you can get a recommendation, sometimes that's more important than somebody recommending themselves. And because everybody's going to say they do the best job, but
Of course.
fellow investors are only going to say somebody did a really good job if they trust it.
Yeah, absolutely. Of course. Yeah, cool, Alex. It's so great you know the topic from all parts. Being investor, being lender.
Yeah, for sure.
It's awesome. So what else? What else? What kind of loans you work with? What are your favorite ones except DSCR?
Yeah, so I mean, it depends exactly what you're looking for, but I mean, another big thing we've been seeing more often recently is bank statement loans. Those are really good loans for self-employed people, whether you're looking for your own place or an investment property. You can write off everything. I have clients who claim a loss, but then we do a bank statement loan and we show they can make $150,000 a year. And long story short, you just take your deposits and have a slight expense ratio, and that's your income. So that's really good for people who are trying to write off everything with the IRS, as we all like to do. And so we've been seeing a lot of those come through recently. We have, in terms of other investment properties, there are asset utilization loans for people who are farther along in their journey and have enough assets if you basically, if you can buy the property cash, you qualify for the loan, long story short. So those are really good loan options as well for people who have the money but don't necessarily want to spend it all on the same property. And very, very competitive rates. So those are really nice. And we also have a no income on a primary residence loan, which is really good because as real estate investors, sometimes we show no income at all. And this is a good way that they don't even ask for income documentation. They don't know what you want. They don't even care what you do for work. And they usually are going to be about 20% down. So there is a larger investment, but it's really good for the people who absolutely need it. So there's a couple of unique and random loans out there that are great.
Yeah, wide topic to learn. And for those guys who are watching us right now, if you have any questions regarding any kind of loans, please put in the chat and Alex will happily answer them. And for those who will be watching us in the future, I'm going to put Alex's social media link under this video. So please, if you want to contact him directly, you always can do it. If you have questions or you have needs or whatever. And probably we have another few minutes left for our podcast. It was a great podcast. It's almost 40 minutes of long. Great. Thank you so much, Alex.
Of course.
You just mentioned very painful topic, rates. So what are your forecasts? What we should expect from market in the nearest future?
So my thought process is the same as where I thought we were at the beginning of the year. And my prediction, which of course may be great, may be absolutely awful, I don't know. But at the beginning of the year, I said that rates were going to go up or down about 0.5% the entire year. And at our best point this year, rates were exactly 0.5% better than they were January 1st. And at our worst point in the year, it was exactly 0.5% worse than where we were January 1st. So I thought it was going to be just for this year. I expect that that's going to continue at least until next summer, that rates are going to continue to go up and down, but we're not going to get any major relief. Rates aren't getting better in the next 12 months, in my opinion. But I also don't think they're getting much worse. I think it just depends on when you buy. You might be at a 6.99, you might be at a 6.5, but it's not going to be massively different in the next 12 months. So I think we're just going to be stuck riding this tense market that it feels like we're in for at least another 12 months. And I think whether it goes longer depends on, of course, what the economy does, what happens in wars and things of that nature, because of course, when bad things happen in the world, rates tend to get better. So honestly, hopefully we don't see rates get super better anytime soon, because that probably means something bad happened.
Yeah, let's hope for better. Let's hope for better. And let's check your forecast in next year summer.
All right, we'll take another look at it.
Yeah. Thank you so much, Alex. It was a great podcast. Lots of information. People, again, if you have questions to Alex, if you want his expertise in something, please feel free to contact him directly. I will put Alex link under this video. Alex, thank you so much. It was very, very cool.
Appreciate it. Yeah, appreciate you having me. It was a great time. Always willing to help out other investors, help people find ways to get into homes. So love it.
Yeah, thank you so much. This is a point. Thank you so much.
Of course. Have a good one.
Yeah, you as well. Bye-bye, Alex. Thank you so much, guys, for being today with us. It was great conversation about loans for investors and not only for investors. And it's beauty of real estate. We always have something to learn. Whenever you are, or you're an experienced investor, or you just looking to buy for yourself your first investment property and you want to know more about real estate, there are always something to learn, something new. And their market is changing, and lenders are changing their term. They're changing their strategy working with borrowers. So there is really always something to learn about lenders, about real estate. And I am real estate investor myself, guys. So if you are private money lenders, my strategy is BRRRR, and I'm always happy to extend my network with GAP loans, GAP lenders. So please reach out to me. Let's talk. Let's build relationship and let's talk. And again, thank you so much, everyone, to being today with us.